COVID deaths continue to rise around the world, but our guest today thinks it is time to start making a strategy for a post-COVID-19 world. Let's talk to James McDonald. He is the CEO of Hercules Investments. So James, let's take a look at your post-COVID-19 strategy. Is it U.S. based or international?
It has to be international because we have an extraordinary anomaly here in the United States that doesn't exist elsewhere, and it's called the Fed. There are many developed nations around the world that don't have trillions of liquidity to inject to confuse markets and change an otherwise certain course toward economic contraction that will, as we are talking about here, be followed by a recovery. Here in the U.S., we have a unique situation where we've already seen a recovery in terms of stock market prices and even beyond. While the Dow is down slightly, the S&P just turned positive for the year, and the NASDAQ 100 is up almost 17%. And so when we're talking post-COVID recovery, it implies that a recovery is ahead here in the United States. I still don't think we've seen the equity prices reflect the true nature of the damage that COVID's causing. So we absolutely have to look internationally, and I've got some gems.
So let's start with, I know one of your gems is Brazil.
Yes.
So let's talk Brazil.
Brazil has an extraordinary, unique situation in terms of investing. They've got the dual effect of having a large, developed, important, strong economy, but the lag of not having a strong central bank. And so the economic impact of COVID has hit hard there. And unlike our country, where we have dozens of huge market leaders, the wealth is concentrated there, even more so than in our economy. And I have selected the number one mall operator, the number one parking operator, the number one airline, and the number one university as key investments for recovery. We're talking about people going back to normal life, going shopping, parking their cars, and getting educated. And there are over 20 million potential students who are going to see their academic trajectories shift from a classroom to the online space, which gives us the double opportunity of having a resumption of normal commerce for the rebound, but then upside in the form of future profits by high margin online education. And in Brazil, there's an extraordinary catch-up that needs to be made. Obviously, Brazil in the 90s and the early 2000s was one of the famous BRICS, Brazil, Russia, India, and China, that were named as huge potential economies by all the think tanks. But we've done so well here in America, they have quite a bit to go to catch up. And those names and, those industries are really looking strong there in Brazil for recovery. We're putting capital there now, and we will continue to do so for the next 2 years.
So would you say that Brazil is at the top of your international post-COVID-19 stock pick list?
It's a good question. It's important to understand that everything we do is quantitative, and so we can have something at the top of the list in terms of interest, but it won't take an overweighting in a portfolio. We have to be diversified, we have to be incremental, and we have to have a broad net to capture the upside. I think Brazil is extraordinarily strong. However, I see equal opportunity in Russia. Russia is one of these places where they're a confused economy because we still have a despot running the show. But that despot is very economically motivated, and the westernization of industry, shifting back and forth between a state-controlled asset to a privately controlled asset, there are speculators there, and we can get some extraordinary bargains in the energy space and the industrial space, and believe it or not, in the tech space. And so while I think Brazil is a very firm, strong investment candidate, I still would not put more than 12% of my assets in the international mix for a recovery. I have an equal weighting in Russia there at 12%. Again, those industries are energy, tech, and industrials. And, Russia will probably outperform Brazil in the long run, but there's a lot more political risk there as well. So we like to balance out risk by not just geographic dispersion, but also the economic thesis. I think that Brazil is going to remain a strong, firm, developed, open economy, whereas Russia, we're going to see some fits and starts. But there's still money to be made.
Describe the market action for today.
The market action today is frenetic. This is a confused market. There are so many different inputs. We have GDP, we have earnings, we have a Fed announcement, and then we have COVID. And so each of these data points may confuse what's coming. We see optimism in earnings from certain companies. We see pessimism in earnings from some companies, like in any normal earnings season. COVID is going to strangle this economy, and COVID has had its grip on the Fed as well. We are all holding our breath to see what the Fed would say, and what they said was, it depends on what happens with COVID. We are going to continue to be cautious, be pragmatic, and be incremental in any investments. And so for a mom and pop investor, I think it's safe to be on the sidelines to wait to see how COVID plays out. If the situation continues to get worse with COVID, there are going to be more losses than gains available in traditional investing. If we see COVID abate, if we see us returning to school, returning to work, if we can put a baseball game on and there are people in the stands, then we can expect an economic recovery and begin investing in a normal way.
All right, great. Thank you for your time. That is James McDonald. He's the CEO of Hercules Investments. I'm Conway G. Gittins, and this is Reuters.